Has somebody ever told you about an investment with incredible returns and you ask yourself, well, why have I never heard of that type of investment before? This is a common question that I get when it comes to real estate syndications. And the short answer is that you probably weren't an accredited investor when you found out about that particular investment. Now, when I first started practicing and investing as a periodontist, at that time, I wasn't considered to be an accredited investor. So the only things that I had available to me was the stock market, normally stocks, bonds, mutual funds. So you can imagine how shocked I was to learn what becoming an accredited investor can do to potentially build your wealth even more than you ever imagined. Now, in this video, we're going to discuss what it means to be an accredited investor, the three benefits of doing so, and where that term actually came from and how you can qualify. If you're new here, I'm Dr. Jeff Anzalone, a periodontist that's on a mission to get you out of the rat race with passive income. Do me a favor, download the passive income guide below this video. Now, let's start off by talking about a little bit of history. So, where exactly did the term accredited investor come from? It actually dates back with the Securities Act of 1933. Now, the government wanted to prevent harm coming to people that actually lacked the knowledge or experience to thoroughly evaluate certain types of investment. So when they set up this act, it actually served two main purposes. The first one was to give investors access to significant financial information concerning the different security offerings that they invested in. All right, so they wanted to give them what they needed to know in order to make the best decision for themselves. And the second thing, the second purpose that it was set up for was basically to prohibit any type of deceit or fraud or misrepresentations, anything like that. So basically it was set up for you and me, the investor, to prevent harm coming from us. Now, you also have to remember, this is 1933, remember? So you have to remember that it was created after we went through the Great Depression. Again, so their goal was to protect the quote, everyday investor. So speaking of investor, speaking of accredited investor, I think this kind of leads us into identifying and defining exactly what is an accredited investor. Now, this is based on two things. It's either based on your income or it's based on your net worth. So let's talk about the income portion first. So a person with an annual income, if you're single, of at least $200,000 in each of the two most recent years, okay? Or if you're married and you're married filing jointly, you make $300,000 a year. So $200,000 a year or more single, $300,000 a year or more married filing jointly. So there must also be a reasonable expectation that you're going to make this same level of income in the current year. All right, so that's the income part. Or you could qualify with net worth. Net worth is a person or married couple with a net worth of at least $1 million, and it does not include your primary residence, which kind of makes me think, well, everybody talks about your best asset is your home, yet in the accredited investor definition, it does not include your home. Think about that. All right. Now let's talk about the three benefits that you would have to being an accredited investor. Number one, you're going to have access to higher yield investment opportunities. Unfortunately, most doctors and other high income and high net worth individuals, we tend to follow the 401k accumulation route, typically set up by a financial advisor. So think about it. We go through, we work hard in school, we rack up all this debt. We juggle between living the good life and investing what's left over each month, typically in the stock market, because that's all we're taught, right? Now, following this path will almost assure you of having to work until you're 65 or older in order to hopefully have enough money to retire. The problem that you're going to run into is that your options are limited. So if you want to cut back or you want to retire earlier, you're going to work just a few days a week. It's extremely hard to do this if you're having to count on time and compound interest to build your wealth, because you've got to work a long time in order to satisfy what your financial advisor typically says. It's usually 25 times your what your take-home pay is. So if your take-home pay is $300,000 a year times 25, that's $7.5 million bucks. That's a lot of money to accumulate. So that's just going to take you a long time of working. Again, your options are limited. Now, there's nothing wrong with this, but one of the main advantages of being an accredited investor, it has to do, remember, it's giving you access to these investment opportunities that can actually shortcut your retirement. So let me give you an example. So typically when a company raises money outside of the public capital markets, it's typically done so with something called a private placement. Many times these private placements, they offer much higher yields than what you might find in the public markets, such as stocks and bonds and mutual funds. Again, if you qualify as an accredited investor, you're going to have access to these types of investments. Other types of opportunities would be, again, real estate syndication, my favorite investment, hedge funds, venture capital, those types of things. All right, benefit number two of being an accredited investor is more diversification. So in a high inflationary environment, having access only to the public markets, it really limits your diversification options for your portfolio. If you're accredited, you can actually diversify into investments that actually hedge against inflation, such as my favorite, cash flowing real estate. Also, in times when the stock market is going down, which what it's been doing most of the time the last year, having access to short-term rentals, mobile home parks, apartments, and other real estate is the key, as it does. And typically, these things don't rise and fall with the markets, right? That's totally separate from what the stock market's doing. So the bottom line is having a well-diversified portfolio can help you mitigate your risk. Benefit number three of being an accredited investor are these higher returns. So if I become a millionaire after 30 years and you become a millionaire after 1 or 2 years, who's the richer person? Well, we're both millionaires, right? But building wealth in a shorter amount of time allows you to compound at a much rapid rate. Being an accredited investor allows you to do that with access to investments, again, that offer much greater returns versus the markets. Traditional index funds, which I used to invest in, many years ago, they average about 7-8% a year. If you look back over the history of the mutual funds and how far they've gone back, 7-8% is not bad. Many of the syndication deals that I'm personally in, they'll offer an internal rate of return 15, 20, 25%. And again, you should realize that also the more risk that you take on, that the higher the potential return you could have, which is the reason I'm really big on teaching people such as you to get as much education and network with as many experienced investors before you invest. You really want to understand what you're investing in. Think about it. If you go to a financial advisor, he just says, okay, I'm going to set you up. I'm just going to you start sending me money. I'm just going to start putting it in there, put it in the market for you. And they'll, sometimes they'll sit there and they'll churn your account. They'll buy, they'll sell, they'll buy, they'll sell. Whether you make money or not, he's still making money. Pretty good business model. But if you don't understand that or understand what's going on, you could get it taken advantage of. And that's with any asset class. All right, so those are the three benefits to becoming an accredited investor. So let's talk a little bit about how you qualify as an accredited investor. So typically, the individual companies that are offering these unregistered securities, if you're going to, say they're going to invest in a syndication, you're going to invest with a company or a syndicator. So those people are the ones that will provide the verification process to confirm that you're an accredited investor. Now, usually they'll have you answer questions about this. If you go to their website, there's a portal, or there'll be a jot form or something, and they'll ask you if you're accredited or not. And then depending on what type of investment it is, you may have to give proof that you qualify as an accredited investor. And the documentation that you may have to provide are some W-2s, tax returns, investments, retirement account statements, things like that. So that's one way that you could do it. A much quicker way to do it. These two ways are kind of the more popular way that you can for the verification process. So verification. So you could just simply call your CPA and you can get him to write you a letter that you're accredited. And what you can do is then you can just take that letter and save it on your computer or something. And anytime that you invest in something and you need to give proof that you were accredited, well, you've got this letter. Another popular way to do it is there's different websites. I know that a popular one is verifyinvestor.com. I'm sure there's other ones out there, but that's a really popular one. So either again, quick way, getting a letter from your CPA or going to a website such as verifyinvestor.com. Now, as an accredited investor, you're going to have access to many alternative investments that look promising. And once you sign up for a company with some of these companies and you get on some of these email lists, it's not going to take long to get inundated with all these different deals. Now, once you start getting things and maybe they start mailing you stuff, don't let all these fancy brochures touting all these high returns fool you. Yes, it can all be exciting at first because you're just enamored with what you could potentially have, but don't do what I did. And I jumped in to investing in these things before I knew what I was doing. So early on, I lost a considerable amount of money with some of these crowdfunding websites, which I don't do anymore, but there's a lot of them out there. And again, once you reach this accredited investor status, spend time educating yourself first on whatever asset class interests you. If it's short-term rentals, if it's mobile home parks, self-storage apartments, whatever. Really dive deep into that particular asset class and really learn it. Make it a point to network with others. Read a lot. I read all the time. So I'm constantly reading books. I'm on forums. I'm in mastermind groups. I mean, literally everything out there, it's free, either on the web, this YouTube video, there's other YouTube videos. And then once you find the team, like it's a sponsor team or a syndicator team, whatever you're going to call it, once you find one or a few that you could trust, then you can start begin moving forward with investing with a little bit more confidence. So speaking of it, networking with others, what I want you to do is check out this video where we're going to discuss exactly how to do this, how to surround yourself with good people. There's actually 5 ways. I'll see you in the video.